Could a black swan happen this year? Back in 2024, one move from Japan triggered a global sell-off, causing S&P to tumble 1,000 point or 2.6% in a day. So the question is, could another black swan happen this year? Right now, markets are extremely optimistic about AI, growth, and the future. Companies are spending billions on AI infrastructure, data centers, semiconductors, and energy. So, what could trigger a black swan? One risk is Japan's interest rates. For years, investors borrowed cheap money in Japanese yen and invested into global assets like US stocks. Because Japan kept rates extremely low, money became cheap. That liquidity helped fuel global markets, especially technology stocks. But here's where it gets dangerous. If Japan continues raising interest rates, borrowing yen becomes more expensive. At the same time, investors may rush to close leveraged positions, leading to selling of stocks to reduce risk and pulling liquidity out of the market. And when institutions unwind leverage together, markets can fall much faster than expected. And we saw a preview of this on August 5th, 2024. Japan unexpectedly raised interest rates. Almost immediately, global markets reacted. The Nikkei crashed over 12% in a single day. US markets sold off. Technology and AI stocks were heavily hit because suddenly investors realized cheap liquidity may not last forever. So why does this matter today? Because the current market may be even more dependent on optimism than before. So what would actually cause Japan to continue raising interest rates? The Bank of Japan mainly looks at a few key macroeconomic factors: inflation, wage growth, economic stability, and the strength of the Japanese yen. For years, Japan struggled with weak inflation and slow growth. That's one reason why interest rates stayed extremely low for such a long time. But recently, inflation in Japan has started rising again. At the same time, wages have also begun increasing, which is important because stronger wage growth can support long-term inflation. A weaker yen also increases import costs for Japan, especially energy and raw materials. If inflation continues staying high while wages continue rising, the Bank of Japan may feel more pressure to normalize interest rates further. And if rates continue moving higher, global liquidity could tighten again. But at the same time, Japan also understands that raising rates too aggressively could hurt economic growth, consumer spending, and financial markets. That's why the Bank of Japan is moving very cautiously. So could rates rise again? And in today's market, expectations may already be extremely high. So while nobody can predict a black swan, smart investors understand one thing: risk matters most when everybody stops paying attention to it. Because real wealth isn't built through hype, it's built through compounding.